Bitcoin isn't trading like a tech stock anymore. For years, Bitcoin moved like a high-risk tech asset, tied closely to the Nasdaq and the big tech names, the so-called Magnificent Seven. But that's starting to change. It's now behaving more like digital gold, less about growth, hype, and more about being a store of value when liquidity expands or markets turn uncertain. This shift could define Bitcoin's next phase. Are you seeing it yet?
Ultimately, what we see is the evolution of Bitcoin from being sort of a tech asset tied to the Mag 7 or tied to the NASDAQ to something that's more akin to digital gold. And as that starts to happen, and I predict that will happen as wallets expand. Let's say there's roughly 300 million or so wallets for Bitcoin right now. Imagine a world where there's a billion wallets, a billion holders. The volatility should dampen. That happened in Microsoft. That happened in things like Google over a 20-year period of time. And so you could see a scenario where more wallets, lots of institutions in the mix, long-term holders, dampening volatility, and then you have this positive flywheel where the volatility is dampened by long-term holders who are owning it in size, and so therefore that reinforces the idea that other long-term holders should come in. I guess the big thing you have to ask yourself is Bitcoin an investment or is it an asset class? If it's an investment, then $1 to $3 trillion, that sort of makes sense. That's akin to a Mag 7 market capitalization. But if it's an asset class, then it should trade to closer to where gold is, and I think gold's, I don't know, $22, $23 trillion right now.